All right, everybody. Happy Easter. We are going to go ahead and get started for today's webinar. Now, again, I go over this strategy that I've been using for about 3 to 4 years now. It's my only consistent strategy that I use to give me that edge on how I make money. The first hour of trading and the last hour of trading. The first thing I'm going to go over, guys, is CRM here. Now, I'm going to explain to you the in-depth analysis as breaking down as briefly as possible, just to kind of get this webinar started. So really quick here, we are on the daily chart. Okay, as you can see, meaning each of these candlesticks, again, you guys should know, equates to a day. So that one candle right here is per day's action. I always start off with top-down analysis for any of the trades that I take because it provides me the overall picture, right, of how the stock is reacting or moving for its actual price action. So for CRM, right, you can see really quick, we're in a clear downtrend, right? We're actually holding its down channel as well. If you can actually count all these support levels here, we are actually quite well with CRM. If you guys were a range trader and taking this on, getting the bounce on top and getting the bounce on bottom. However, I want to explain to you how I like to trade this, right? So for CRM on Thursday, because Friday was closed for Good Friday, we can ignore, let's just say Friday's action, right? In hindsight, just ignore that little candle that happened. Now this stock appeared on my watch list, right? Because we were very close of breaking previous resistance, right? Which I marked on my price charts on my price as 212.89. Of course, remember this is going to be a range of numbers. It doesn't have to be by the penny. It could be 213. It could be 212.86. As long as we get that, that average number of where we can note down of potential resistance or support levels, that's a level that we should always be mindful of as we're trading. Now, of course, looking at CRM really quick, right? We're noticing that if I zoom back in a little bit closer, we're noticing that CRM touched that same number that on Thursday prior to Friday's action, right? If we ignore this candle again, so that puts the stock on my watch list immediately. Okay, now before I get into a more in-depth analysis on the 1 minute and the 5 minute chart of what we trade upon as, right? The fact that I know firsthand is that we're on a yearly daily chart. We are very close of breaking this 212 level, right? Or you can say 213, meaning that if we break the bullish bears or the bias of thesis, means the stock can continue up and rally pretty damn hard, right? It can squeeze to the upside, and if it doesn't and it gets rejected, we can also see a potential dump. Regardless of what it is, we are traders here. We react. We trade what we see and the potential of risk to reward. So, of course, if I am a bullish trader and I want to see, or if I have a bullish bias on this stock and I want to see this name break this 213, continue to hold, right? And then we see some momentum pushing this up for continuation play, then that's the trade and that's the intent that I want to trade this stock as. Okay, so now I'm going to go ahead and share my other screen, which again is, see. Let me fix this for you really quick. You could ignore the bottom active trader guys, but time and sales is not active because market hours is not open, so I'm going to remove all of this. I have my level 2 and my news here as well, but I'm going to remove it just so it's a little bit clearer for you guys. So just exactly from that analysis that we did on the daily time frame, right? We were looking for a break of 212.89. Again, top-down analysis, it's still noted on my 1 minute chart. My left-hand side is my 1 minute. So each of these candles are 1 minute, right? And on the left side is my 5 minutes. So each of these candles are 5 minutes time frame. Now going back into that thesis, right, of CRM, we're looking for that bullish momentum play because we saw it very close to touching that 213 mark, right? Which again, 213 is right here. Okay. And this green line right here is our pre-market high. And this red line right here is our pre-market low. Again, these resources on all these codes and scripts are in the resources tab in our Discord channel. If you guys want to go there, scroll up, and you can, enable the script itself into your platform. It'll automatically do this for you per day, per ticker, so you don't have to mark it on your own manually. Now, if we're watching this potential ticker, right, guys? Again, we're watching for this break and for this hold of 213 based off top-down analysis. Now, based off my strategy and my edge alone, I need to look at any stock ticker from a top-down analysis point of view prior to me entering this messiness of what you guys are about to see. Okay, because if I didn't know that this was an actual critical level of resistance or support, I would not trade this stock based off just seeing these two types of price actions. All right, it could be the previous day's close, which is also this white line, but it just, it's parallel to the pre-market low right now, so you don't see three separate lines. But just to kind of give you guys a clear, example, I need this number here for me to have a stronger bias to the upside if we break and hold. Okay, this price level is more important to me than the pre-market high or the pre-market low levels. Okay, these levels are just to confirm my bias and confirm my thesis as I trade this stock for the day. Okay, so let's go back, right? My first thesis, right, of this stock is I need this to break and hold the 213 level. Okay, now that gives me a bullish bias. If I'm swing trading this, I'm looking at a longer time frame. Now, as I'm a day trader here, guys, I'm now looking for that hold, which we did hold right here. Again, we are on the 1 minute chart, right? So each of these candles are 1 minute, and these are going to be going really quickly, in and out, in and out, in and out. Okay. Now, my second bias, right, to show me continuation, momentum plays. I want to see this to the upside because I want to trade this to the upside. My intent is to trade this to the upside. Okay, is that I want to see the pre-market high break here now, which again, we did. Okay, it's very easy to kind of know, in hindsight, because the market's closed, it's not fluctuating up and down, right? You're not getting shaken out if you were to enter, 2 minutes prior, or if you enter to the break, right? Because as these candles kind of start to react, you're going to see it go up and down, you're going to get shaken out, right? But again, as you're trading this, right, the risk to reward standpoint of how we trade is break of this gives me that green light. Okay, go. We held here. I want to trade this only to the upside. There is no reason for me to trade this to the downside. Number two, broke pre-market high. Again, we do not like to chase stocks here, although sometimes, the market's not nice to us, right? And like this, for example, doesn't really give us that nice pullback for us to enter here. But of course, that gives me the second confirmation or second validation that I should still be trading this to the upside. Okay. Now this stock could have went two ways, right? In hindsight, look, it just blasted off. But if this were to sell back down and this were to not hold and this were to not hold, right? That risk to reward is still there because that gives you the notion to get out of the trade here, right? Minimal loss, right? Because your goal here is to, small losses, big wins, or break even, right? If you were to enter on this break, right? Or if this was a nicer stock ticker that gave us that pullback and you entered on that pullback and we broke and closed below that pre-market high, that could be your first signal that, hey, this could be a fake out, right? You can just get out there and then just re-enter if the trade, is more clear to you. Okay. Or this could continue to dump and then break that 212 level, 213 level that you had on your top down analysis and say, oh, this is definitely a fake out. Okay. I am not even going to touch the stock anymore. I'm not going to trade it. My bullish bias, my homework, nothing is there. Nothing, the setup is not there for me anymore. So I'm going to move on to the next name. Okay. But of course, looking at this name, everything did work out into our bullish thesis, trade analysis. So we're looking at this. If we were to enter here, and we continue to trade this to the upside because we first broke this and we first broke this, right? Although we didn't get that nice pullback for that nice entry here, break of resistance to react as support, it still kind of favors us because we are seeing higher lows, higher lows, higher lows, higher lows. Okay. And that kind of gives you that hindsight in how you trade, because when you're looking at this stock, that's exactly what you want to trade as, right? You want to see different levels act as validations and confirmations. You may have confluence too when you look into like the option flow channel that I'm about to share with you guys as well. But at the same time, when you guys have these certain trades that you want to day trade, you should always start back on that top-down analysis, look at it from a smaller time frame for your entries and exits. And if we break that pre-market high, again, the risk to reward. We're probability traders. Okay, we're trading here. We can only, ask for so much, right? We might not get the perfect entry, right? We might not get the perfect exit, but the fact that we had a game plan and we had the right directional play gives us 80% of that profit already. Because if you just scalp this here, you're profiting. If you just scalp this and you continue holding because you saw, let me here. I'll make it nice and clean, but draw actual price levels, right? You saw this breakout and you saw this retest here. Okay, you saw this breakout again, and then you saw this retest here. Okay, this gives you that nice look, easy price action. Go up, pull back, broke out again, pull back. We continue to hold this level now. Okay, so this could be a level of support now as we're day trading this. Broke out again, and then that pullback. 216 is your next level of support. We're holding this here. Buyers are keeping this up. Gives you that nice run again. Pull back again, right? And here, let me undo. Draw this out for you. Boom. Pull back. We broke out again here. Pull back, and we're continuing to hold now 216 levels. Okay. Just looking at this notion in hindsight, right? This is an easy trade. This was an easy trade. If you can continue to hold and see that these levels are not making not making lower lows, and it's continuing to make higher highs, this was an easy, nice setup trade for you to take. And of course, if you're looking at it now, right? Let's say on the 5-minute chart, you could have just traded this the first 5, 10, 15, 20 minutes of the day, and you would have made a ton of money. Okay, trading this one ticker, and you could have been done for the day. You don't have to trade again anymore, right? Again, the most volatility happens the first hour of the day or the last hour of the day. For me, I only trade the first hour of the day because during dead man hours, you're trading against computers and algos. You're not trading with actual people, right? But if you're trading something like this, where everybody's trying to get in and out of a stock, and you're watching this kind of play out. Look, each of these is 5 minutes, right? 5, 10, 15, 20. Let's just say you got a little luck on your side on Thursday, right? And you got out at like let's say right here. That would have been a crazy return. Okay, if you just saw this notion and you said, okay, we broke and we held. Okay, that's the first price level that I needed to see break and hold. And again, my second one, pre-market high. Okay, now I'm gonna give you another example that it's gonna be a little bit more. Hold on, give me a sec. Alex, what time frame for stop loss? Is it right when it breaks below pre-market high or 213, or wait to see if it holds below till end of day / few hours? So this exact strategy, Alex, it is going to work for you to trade the first, I would say, 30 minutes to an hour of the day. Of course, if you just look at this stock throughout the whole day, right? It didn't fade. We have these levels here set that it didn't even break back down, but there are some different examples where they do, where we get that nice push up and then we just fade end of day. Of course, when you see things like that and not hold, you right off the bat, you don't want to hold stocks like that. Reason for it being, right? Let me see if I can kind of draw this out for you. If we continue to make, higher highs here, right? This is bullishness forever, right? And then now you see this little consolidation period here, and then we kind of just broke down here. If you're a day trader, that is exactly the point of where you should say, hey, I'm going to scale out of the trade, or I'm going to get out completely. Because now for the next whatever choppiness throughout the day, you don't know where the actual direction is. You already caught the bulk of the move. Okay. Now, of course, when you're looking at this from a risk to reward perspective, here, going back to top-down analysis, right? Going back to the daily mark of each candle, right? So this is one day. You can go ahead and take the average price action for the day. So each day's move is roughly around $4 to $5, maybe even $6. Okay, if you go back into the actual chart itself and you say you already caught the bulk of this $5 to $6 movement, for you to continue to hold up here, it is absolutely greed coming in. Okay, you can, don't get me wrong, the stock can continue going up and up and up, right? But for you to not even scale out at this position or at this level right here, or to not even consider exiting and just say, hey, I'm going to hold on to this for kingdom come, I don't know, another week or two or whatnot, and you're saying that you're a day trader, is the absolute wrong mentality, because your risk to reward is now much worse than it was when you entered here. Because your risk to reward here now is that if you're continuing to hold here, you're risking all of this for potentially a tiny reward now, if that makes sense. So something like that is it's, you know, something you got to work on when you're looking at stocks like this, because a lot of times, even when you're catching these moments, and a lot of people, they look at their P&Ls, right? And then they say, oh, I didn't make the same amount of money that I should be making, which is $1,000 per day, right? Something ridiculous. Like I'm hitting $900 and I need to make that extra $100. That's greed coming in, right? And of course, you can't trade looking at your P&L, because the stock price and the stock movement might not give you that extra bump, right? It could, but I mean, for you to capture all of this and to greed for that extra $100 is nonsense, in my opinion. But yeah, I'm gonna go ahead and move forward because I have a lot to talk about today. But that is just a brief rundown. So if I'm looking now back at my 1 minute chart, and you guys are going to see all these crazy lines, right? Now, these crazy lines here is something that I don't really trade looking at. My eyesight and my brain is kind of programmed to ignore these lines, even though you guys are looking at this like, oh, it's completely messy, right? But when I see this, I'm a price action trader, meaning when I see, you know, like these levels here, right? Break, boom, continue to hold, break, boom, continue to hold, break, boom, continue to hold. That's what I see. I don't see my messy lines anymore. However, these messy lines do help when you are looking for extra validation as you're day trading. Why? Because first off, the yellow line, guys, is our Bollinger Bands. Okay. Our purple, or let's go with the teal line. Our teal line is our 9 EMA. Okay. And our orange is our 21 EMA. And our middle purple line is just a middle VWAP. Okay. So one thing I want to essence here, just to kind of put through, is that Bollinger Bands, it measures the volatility of the stock, right? For how it's moving throughout the day. Okay. You can do this on a different time frame. It'll show you the same exact thing for that exact time frame. But because we're on the 1 day, 1 minute chart, it's going to show you the volatility in the 1 day, 1 minute chart. Okay. The 9 EMA, of course, is just a moving average, right? It's still technically a lagging indicator, just like the 21 EMA, just like the SMAs. But of course, a lot of people trade looking at these confirmation biases, right? Because this price action of these candlesticks right now is still above my teal line, right? Which is my 9 EMA. The fact that it's above my 9 EMA continues to let me know that, hey, it's okay to stay in this trade. Maybe at this break, right? From when I'm looking at it, of this crossing over here would give me that, you know, signal to be like, hey, Chemo, maybe it's time for you to scale out here. You know, it's getting kind of risky, right? Holding this after this entire leg move. So that kind of gives you that extra validation. Okay, here's the breakdown below. Time for me to scale out, time for me to exit. You know, Bollinger Bands is also squeezing, getting a little bit tighter, meaning volatility is probably not there anymore to the upside anymore. You know, so things like that kind of gives you that extra validation as you day trade. The middle VWAP though, here guys, I rarely look. A lot of people like to play the crossovers. You know, if like the 9 and the 21 crossover here, it's like, oh, I'm gonna enter here now because everything is bullish on my SMAs or my EMAs, right? But for me, it's just telling me that at this exact point where I would have entered, because you know I want to trade above this pre-market high. I'm a price action trader. Okay, maybe on this pullback. I love getting in pullbacks, only on pullbacks. I never like to chase. Otherwise, you probably would have entered and chased on this high, and you get shaken out on this next red candle. Okay, you always get in on pullbacks, and that's the rule of thumb. And one thing that I like to say, guys, is like, you know, you buy dips, you don't buy dicks. Okay, so what I mean by that is like, you want to buy dips. Okay, you don't want to buy dicks. Okay, because when you buy dips, your maximum risk to reward is much higher than if you buy dicks. You buy the top of the dick, right? I mean, you're not going to be capturing as much as you were if you buy the dip. Okay, guys. But I mean, again, looking at these indicators or these lines just gives me that extra confirmation of me holding this stock. If the reason of my bias of the thesis of getting into this trade was because of these two levels. Okay, so these two levels got me in. That's already 1 and 2 confirmations. Making higher lows is my third. Again, break and low, right? Right here, breakout, retest, breakout, retest, breakout, retest. Of course, we are still above my 9 EMA. That's my fourth confirmation for this trade. And of course, my fifth is we're just above the purple VWAP, meaning bullish buyers are coming in for the stock for the day. And of course, just above the 21, right? Of course, when it enters here on this crossover, when it starts to kind of, the candle itself kind of starts to cross over the 9 EMA is when I should start maybe scaling out of the trade or saying, hey, maybe it's time to just get out completely. You know, the trade was spectacular already. You can't get greed involved and trying to capture more of this. But of course, you know, that's just how I like to trade. And of course, guys, this is me just being done trading for the day after. Okay, this would be like 30-40 minutes of work, and I'm fatigued out. I'm done for the trade because, again, this is 40 minutes in. For me to ask for another stock ticker, I know there's some, you know, greater traders out there that can trade, you know, 4, 5, 6 tickers at one sitting. I can't do that. But I like to keep my whole focus here, and I'd probably be done for the morning, and then I'll come back, you know, at night, or not at night, but at the end of the trading session, and look for a potential swing. Okay, we got a question from Ken. For day traders, do you use the 1 minute to see the action and 5 minute to decide if you should exit? Yes, I do. So just looking at this, right? We will continue to use CRM for a quick example. Kind of zoom in here. So if you're the type of trader that likes to potentially hold longer than it is, and you buy like a month's out expiration just because you feel like you want to buy that extra time, you should be trading on the 5 minute. 5 minutes, I like to look for specific chart patterns. I can also just based off this look if we continue to see, the close of the candles, right, is exactly at the points of where we've broken out here on the 1 day, 1 minute. But of course, this is a bad example because it doesn't really set up any patterns here. So for me to trade off the 5 minute here is almost irrelevant for me if I was trading CRM. I'll try to find an example for you, which I would trade on the 5 minute. A good example actually was Boeing that we did trade. We made a ton of money earlier this week. But before that, let me go ahead and give you a couple of examples of three. I'm gonna give you 3 examples. One is NVDA, right, which is going to give us that same validation and same concept of how we can find confirmation plus confluence. Okay. The second example, which I'm going to share later, is JD, which we get rejection of, right? So it gives you that idea that you should not trade this to the upside. And my last one is Palantir, which is very similar, but we get that continuation play to the downside. Okay. So for NVIDIA here, I'm going to go ahead and show you it from a, give me 1 second and set this up. Okay, now for NVIDIA here, right, guys, same exact thesis that you should kind of set up is, right, we want to see the break of pre-market high, okay? And what I like to always hopefully get from the markets, right, is exactly what NVIDIA set us up for, okay? We get the break of pre-market high. Unless you're a scalper, right, and when I say scalper, you're getting in within a minute, 2 minutes, right, maybe tops, right, in and out plays. You should never chase a stock like this. Sometimes, it doesn't ever come back down. Like if you were to trade this the first 5-10 minutes, right, it never really came back down to give us a nice pullback. This could have been your pullback for entry, but of course, without actual validation here, you might not get in here. Okay. But most of the time, or some of the times when you get this breakout, you get this nice pullback like we did like we had right here. Okay. This pullback gives you the maximum risk to reward factor. Okay. As in, if I were to enter here and let's just say the stock dips down and we close below this line, maybe like 1% or 2%, right? Your loss is much smaller than if you were to enter like, here, right? Or off this continuation play after this breakout. Okay. So that's why we like to always enter on this pullback sometimes. And we've missed some trades, right? Sometimes the stock just continues up and up and up, gives us no actual pullback, and we miss the trade completely. But hey, that's fine, right? There's opportunities in the stock market every single day. And you're not going to be able to catch them all. Okay. I think that's the biggest drawdown for newer traders is that they force themselves to try and capture every single stock movement. And when they see something that moves and then they miss it, they get bummed out, and then they take it out on themselves, and then they start forcing trades, which is really bad. Okay, but for NVIDIA here, if you stay patient, right, and you saw this breakout and you said, okay, let me see if I get that pullback to pre-market high, and then I would enter here, right? This would be the best risk to reward trade for you to trade this to the upside. Now I'm going to show you something where this is like an extra edge when you guys trade, and this is also how I trade as well. I look into our Discord page, okay, and I look on the option flow. Okay, this is real-time data that institutions pay for, or institutions buy and sell. Okay, so right here at 6:37 a.m., or you could say 6:36 a.m. because I'm trading on the West Coast. Okay, guys, we had buyers here in NVIDIA. Okay, and it kind of shows you at the spot, right? And it shows you what strike, 545 strike, right? They spent 45K, 132 contracts at 337, and we had another buyer here right after, shortly after. Okay. 117 contracts at $3.32. Now, looking back at the charts now, after I show you guys this, these were the first two prints, okay, for the day. And of course, we all know now that the option flow channel is a leading indicator most of the time, especially when you're trading this specific strategy. Okay, 637. Let me mark it right. Okay, 637, right over here. Okay, at this blue dot around somewhere here at 6:37 in the morning, or 9:37 in the morning if you're trading on the East Coast, we had institutions start buying some contracts, 545 strike to the upside in NVIDIA. Okay, now looking at this, right, we know that, we know that, let me make this nicer. So right over there. And then we're looking at this trade. Okay, we saw some buyers here. We probably maybe want to scalp, right? If we just blindly followed the option flow, then we could have scalped here for a nice little profit. Okay, but of course, no, I'd rather use the option flow as confluence to what my trading strategy is, right? That's more validation to how I trade. Okay, again, remember when I like to trade my strategies, I like to wait for that pullback. I had my first indication, right, which was the break of the pre-market high. Now I want to see this continue to hold, right, and give me that nice entry point. Okay, I do know now that we had option flow activity and institutions also buying this particular stock to the upside, meaning that, okay, I have now institutions on the same directional trade that I like to trade this on at the same time. Of course, that doesn't mean I'm blindly following the option flow channel. Okay, guys, you should never blindly follow. You should always do your homework, do your due diligence, right? Follow your trading strategy first. But when you have other edge that kind of indicates the same way, that gives you a stronger validation to also trade that at the same direction. So of course, we're looking at it, right? NVIDIA right here. If we were to enter here based off the knowledge that we had institutions buying this, and this is our specific strategy, meaning institutions could be wrong, but hey, this is the best risk to reward trade that I'm going to get. So I'm going to enter here. If it sells off and dumps, so be it. I'm going to get out for a small loss. Okay. But the fact that we also have an extra edge that institutions are buying this, right, we're going to continue to hold. And if you continue to hold this, right, because there was no reason for you to sell, then that you look what happens to the stock. Just look what happens. Let me remove this. All right, look on the right side. All right, it just continued to blast off. Okay, and of course I did my top down analysis, which is why you see that price action of price level 550 here. If I didn't do my top down analysis, it kind of broken perfectly too, almost, right? A little bit, little wiggle room here to play, but it kind of shows you how strong top-down analysis is when you guys are trading for actual support and resistance levels. But that's one way for you guys to get extra edge when you guys are trading this specific strategy. And sometimes I don't trade anything in the morning unless I get that actual confluence in the option flow. Meaning if I see, let's just say I see NVIDIA kind of blast off here, right? And I don't see that extra option flow institutions buying it at the same time in the option flow. Sometimes I'm like, okay, hey, I'm kind of iffy on this. I wasn't really prepared for this trade anyways, so I'm not going to enter. Okay. And then sometimes it works out. Sometimes it doesn't work out, right? But of course, at least it gives you that extra edge on how to trade this particular stock. Moving forward, so JD is a perfect example as well for a stock where you want to also trade the same setup, the same strategy, right? I'm gonna go ahead and remove this so it's a little bit easier for you guys to kind of see, because again, I am a price action trader. It's a little bit clearer too. So in JD here, right? Remember our first, thesis, right? We want to see that pre-market high break. We really want to see that break. Okay, if we're trading this to the upside, or we have a bullish bias, you did your homework. You only want to trade to the upside, and you want to see that break. Okay, and obviously we didn't. We had that first level trying to touch it, right? Where it seemed like buyers can almost get this going, right? But we didn't. Okay, resistance, pre-market high resistance here, and again, we're not in this trade yet, right? This is choppy action. There was no reason for you to enter this trade. No reason for you to, even guess. I mean, now you're just forcing a trade. I mean, maybe it can go in your favor and you make a ton of money, but as a trader, there was no reason for you to even enter this trade yet, in my eyes. And of course, we had that second retouch now of pre-market high. And again, sellers came in very heavily. They said, hey, no way, Jose, I'm going to let this stock break pre-market high, $87 per share. Okay. And then we continue to dump. Okay. Now, when you see a stock like this, okay, it already kind of gave you that clear signal of what potential buyers wanted in the morning. Okay. Meaning buyers liked it here at 6:30 in the morning. Okay. Okay. 9:30 in the morning, depending on when you're trading. Okay. Buyers again like this here. However, sellers like this here too. Sellers like this here even more. Now you're just getting a tug of war. Who is actually going to win this battle? Okay. Sellers won that battle. Now we have it over here. Buyers are winning this battle. So you're getting a choppy action where you're not getting a clear directional move. So there's no reason for you to actually enter this trade. However, when you're looking at this here now, again, you see this third wave of sellers coming in now. Okay. And you're seeing this heavy selling coming in where it's just red, 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 red. It's not red, green, red, green, red, green anymore. Okay. So, and this could also be like a triple top. Okay. Or this could be a triple bottom. However, you're waiting for that clean break on either side for you to actually dictate the actual directional trade. And of course, when you have that breakout, guys, unless you're scalping, you also don't want to enter on that breakout. Okay. Whether it's a breakout or breakdown, you always want to enter on a pullback. So in this particular case in JD, sellers actually won this battle. Okay, you can look at it on the right side. Sellers won this battle. We noted this 87 or 86.30 on our charts, and look, sellers are starting to push this here. When you see this just continuing to weaken out, when buyers can't even push this back up to pre-market high levels, you know for a fact that, hey, sellers are probably going to win this battle. Now you can maybe have a specific or a minor edge and say, okay, I'll play this to the downside just because now it looks like, hey, buyers aren't even able to push this back up anymore. And we're just kind of, you could draw a pattern here if you want, right? But that's really too tight for me of a pattern to really dictate. But if you just look at this based off of buyers or sellers, price action, it looks like, hey, sellers are going to win. Then maybe you can scale into the position. You buy one contract here, okay, one put here, okay, and it kind of dumps, right? And then maybe you can just get out and call it a day. Or you can continue to just be, okay, I'll wait, right? Because we always want to get in on pullbacks, okay? Let's just say you didn't enter here, okay? Which honestly, I wouldn't, right? I'd wait, let that thing break down to give you a clear, like, okay, now I know sellers are winning here. There's no reason for me to trade this to the upside. I'm only going to try and trade this to the downside, okay? We retest here, the exact same level of where we had this action in the morning, right? Meaning that, hey, if this breaks back up above here, honestly, guys, this is probably like almost an hour in now. I'm probably not even gonna look at the stock anymore, because it's just too much now. It probably is gonna be choppy for the rest of the day, and it's probably just gonna waste my time. I'll probably look at a different ticker at this point. However, we continue to let me move this. We continue to show sellers having the strength on here. okay? Because we obviously never even broke the 86 or above this level again. So we're just continue to straight dump here, okay? And you look at it on the right side again, huge dump after that, okay? So it kind of gives you that clear direction, guys. You can trade this same strategy to the up or the downside. You just got to get something clear when you guys have actual price alerts where you're looking at the actual movement, okay? Now, the reason why for this, it's probably TOS's fault, but this is actually around the pre-market low, okay? I mean, I don't know, something probably happened here during pre-market data where it kind of construed here. Again, this is not the script's fault. This is TOS's fault, the actual platform. There's nothing we can do to fix it. But, you know, that would have been your level here of pre-market lows of where it kind of broke off, retouched, and said, hey, sellers are going to win this battle today. And then we just dumped. And you could have scalped this, you could have day traded this, you could make like a couple $100, couple $1,000, depending on your position size, right? But you look, it kind of shows you that this strategy or this, you know, one ticker alone will make you a ton of money. You don't need to catch every stock that moves per day. You just got to do what you got to do with your game plan and top-down analysis, and then work on this same exact strategy to find out who's winning the battle for the day. Are we going to get continuation, or are we going to get a bunch of choppiness, right? For the next stock too, guys, I want to show you is Palantir 2. And again, this Palantir is going to be exact or similar to what we had in JD. Okay, just to give you an idea as well. Let me go ahead and share with you the Discord, right? So again, I'm going to go ahead and go into my option flow channel, right, which I'm in, guys. I'm going to go ahead and Control F or Command F, and I'm going to type in PLTR. Right, just because I want to, you know, scroll back and look at where we were on Thursday. So the first printouts of some puts was 10:28 a.m. on the Eastern Standard Time. So that's around 7:28 our time if you're trading on the West Coast. Now I'm going back to my charts itself, where it's exactly where this blue level is right here. Okay, guys. So this is for you to just kind of, if you know, I know a lot of people out there, they don't like to wait. They like to manage their day trades. They want to make sure they capitalize on every day trade they have left to make some money here and there. And this is kind of to show you that the institutional option flow is a leading indicator, right? It's not always right, but when you catch those first few moves and you're scalping them, the probability of you winning is maybe 85, 90%, right? And of course, when you're finding that directional trade, it's also going to give you an idea of where, you know, the big guys are wanting to trade this stock for the day, right? And just looking at PLTR, right? No, this is not this one. So that's exactly where you saw the first flows. And I'm again show you the Discord. Okay, look at it right here. So on 4/1, right, which was Thursday, we saw PLTR puts come in, 23.5 strike puts, you know, at the spot at 23.39 per share. Someone that bought 690 contracts at 93 cents. Okay, they could have scalped this, made a ton of money, huge. And we saw another order come in, another order come in, another order come in. I mean, that's throughout the day as well. Okay, so now going back into the, just looking at this, right? Let's say you're trading this live and you saw some option flow coming in there and you said, hey, oh my God, someone just bought in PLTR puts. I'm looking at the stock anyways, right? And I see we couldn't break pre-market high anyways. No reason for me to even look at this trade to trade on the upside. However, we're getting very close to breaking pre-market low levels. Maybe I'll shoot my shot. I'll buy some puts here, right? Maybe I'll try and scale into, I'll buy one contract here. Okay. And you could have scalped that, like I said, again, right? Looking at it from hindsight, right? You could have scalped just back to pre-market low from when, you know, institutions started buying it here. Okay. And you could have been like, oh yeah, hey, that was a good trade. I just made like, I don't know, one contract. You probably would have made like $50. Okay. Hey, some people can't make $50 in a whole day, right? You just made $50 in like 10 minutes. Okay. But you know, just looking at this, you're like, okay, I'm gonna shoot my shots here. I'll buy a contract here. Okay. And then you're going to see the same strategy kind of flow through here. Okay, guys, we're going to break pre-market lows here, kind of start consolidating here. Okay, we see very, very high weakness here for the buyers to try and push this continuing to go up. But we see very strong selling pressure start to come in, right? We're about to break pre-market lows here. Okay, and you look at it on the right side. Okay, this is all 1 minute on the left, and then each of these candles are on the 5 minutes. So we're continuing to break. Look at this. Sellers are winning this battle throughout the whole day. So let's just say, remember when we saw at this given moment, when we first saw those PLTR puts start to print, and let's say, hey, you were like so sure, you did your homework, for some reason you're like, hey, Palantir is going down for today. Like, hey, I'm gonna just size up, I'm put my big boy pants on, I'm buy like 50 contracts here. And you nailed it. All right, you followed the option flow and you nailed it, and you didn't want to scalp, you just wanted to see this continue break, and you break and then break. Look, high, look, lower lows and lower highs. Okay. Same exact example of what we showed you in CRM when we're making higher highs. This is right here is lower lows, meaning exact same concept, but to the downside. We break, we retrace, okay? We retrace and we retest. Break again, okay? We retrace and we retest again. Break, retest, right? It's literally the same thing, but to the downside. Okay, and if you were to take that trade on and you just made like a ton of money, this kind of gives you the idea of these exact levels for you to note: pre-market high, pre-market low. The white line again is previous day's close for which should also be kind of, I guess, looked upon at when you're trading, because it does show you what it closed on the previous day, to show you if it changed, red to green, green to red, whatnot. But again, the price action for this stock, right? You just want to see momentum kick in either direction. Okay, you can't have too much emotion when you're trading these stocks, because you're just literally looking at these stocks saying, okay, who is going to win and who is winning? Okay, from the open, sellers are obviously winning the battle. Okay, that kind of gives me that first bias saying, okay, sellers really want to bring this down. Maybe on the next pullback up, I would also like to ride that one leg down as well. Okay, because there was no reason for me to trade this up to the upside. However, there is still also no clear indication for me to, note that, okay, sellers are going to win immediately right at the open. Okay, it kind of just shows you when you see lower highs plus lower lows start to form, and off this actual break, we can potentially see, a huge dump throughout the next, I don't know, couple hours, couple minutes at least, or something, right? Of course, same potential trade when I'm talking risk to reward here, because sometimes these trades don't go in your favor. Okay, you might get a fake out, right? Let's just say it dumped here and we did it, and then buyers obviously or just randomly came in and pushed this up. Okay, that's a fake out, right? We saw a break, but we didn't see that continuation move to the downside like we want to, right? But of course, the reason why we enter off this break is, again, we have that maximum or that very high potential of risk to reward. Meaning if we do close back above here a little bit, hey, you're not losing that much money. Okay. Remember, your goal here is to make a ton of money or break even or lose a little money. Okay. Because you're still shooting your shot on probability, right? We're traders here is probability. We're not here to also catch the tops and the bottoms. We're here to catch the in-betweens, especially us retail traders. That's what's going to get us paid left and right consistently. Okay, if you force yourself to try and catch the tops and the bottoms every single time, you're gonna fatigue yourself out. You're gonna burn yourself out, and you're just probably gonna end up losing money when you have a profitable trade already, right? You're having the greed factor come in, and that's not what you want, right? You want to be able to secure and lock in the gains here. When of course you have this huge data that kind of shows you, and again, you can draw the patterns here. I'm not gonna be. Oh, actually, this is a good example here. Maybe I can use the 5-day 5-minute, right? And let's say like, oh, I'm seeing lower lows or whatnot. Okay, I'm seeing this triangle forming. We're kind of squeezing out here, right? Yada yada yada. I'm looking. Let's say I look back at it on the 1-minute chart because it's a little bit more clear, right? Higher, lower highs. Okay, it looks like we're squeezing. We want to break this down to the downside, and you're waiting for that confirmation. Okay, when that confirmation appears, you can be like, oh shit, I also saw option flow come in and people bought PLTR puts. Yo, everything is telling me to the downside. I'm gonna scalp this. I'm gonna day trade this. Whatever it is, right? I'm gonna make some money here, lock it in, call it a day. It is what it is. That's all you really need to do as traders. You don't really need to jump in at every little movement here, because a lot of times people are looking at this, right? And they're saying, oh shit, buyers are coming in here. Now I'm gonna buy to the upside. And then they get caught in here because they're not patient enough to let this trade play out. Okay. That's the reason why I love using this pre-market high and pre-market low strategy, as well as the PDC, right? Because it gives me uh, a little bit of discipline, because I'm probably not going to take a trade on if it trades in between here, right? It's choppiness if it does. However, if it kind of shows me like what Palantir did, as in, look, we're kind of showing we're still showing choppiness. There was no reason for me to enter this trade here. But the fact that now I see a chart pattern kind of start forming on the 5-minute, I'm thinking, okay, hey, I see sellers here, winning the battle. We're getting very close to squeezing out, to the downside. I see a breakdown possibly happening, right? Because I see the influx of PLTR puts start to print out, and I'm thinking, okay, I will shoot my shot here, okay? And of course, off this maybe huge confirmation where it's like this trend might actually hold, maybe the next time that it happens, I'll try to enter as closely as possible here, right? And then of course you can also use this as like stop loss, right? If it breaks back above, let's just say it goes here and it continues up, you can use it as a stop loss, right? You should always have a mental stop loss when you're trading this. But again, when you're just looking at this, I just want to get a clear concept of my strategy here. Is just looking at it from a perspective of who's actually winning the battle, buyers or sellers, and then finding that 1, 2, 3 key validation points, and a confluence, right? Using the option flow channel as confluence, backing up your validation, backing up your bias for that particular trade. Yeah, and again, all these trades here, I mean, in hindsight, it's very easy to do, right? But a lot of people, they like to get in. They like to force trades when there's nothing there, and they do this and do that. I mean, it's something that's gonna come to you as you guys continue to practice, strategize. You can even try and paper trade this, right? And then see and then back test all this price action movement. But here, let me go ahead and share back my screen itself. And this is Palantir. It's my other monitor. But yeah, anyways, do you guys have any questions? Again, yeah, this script itself is in the resources channel. If you guys are having trouble to input it into your TOS charts, just DM me, let me know. Cool. Okay, and there's a couple tickers I wanted to kind of discuss here, man. First one that I'm actually really watching for here, guys. Again, I only do my homework and my due diligence on top-down analysis. It gives me a clear edge of where the stock is kind of trying to move. First one is DKNG. Some of you guys may know this names, DraftKings, right? Just based off this top-down analysis, I'll just kind of walk you through what I'm thinking, what I'm looking, right? So this right here was previous resistance. Okay, we obviously broke out, right? The reason why I leave this here is because this was a very critical price point, okay, in the past. And you can tell by historical price action that most of the time it will reenact, whatever it was in the past. So in this case, this was resistance, meaning buyers tried to push us up, but sellers won. Buyers push us up, sellers won again. Buyers push us up this time, but this time buyers actually won. Okay. However, we're just because, we're not trailing near this price action anymore. We still need to note that this is a potential area of support now. If it ever does trail back down around this price action or price level, right? Which we did here. Is our first one. If we didn't leave this number here into our charts, and let's say we were going back into our smaller time frame charts and we're day trading this, right? We wouldn't have ever known that this would have been a key level. Now, if I had this noted down on my smaller time frame and I saw, hey, yo, I have this teal line just appearing on my 1 minute chart, like what the hell is this again, right? Because I'm not going to remember, right? I just leave it on my charts. I can go ahead and like note it down as, oh, hey, this was a previous level of resistance or a strong critical level. So I should, if I'm trading this to the downside here, right? Let's just say I cut this downside move. I should probably start getting out of this trade when I see this appearing. Okay. Or vice versa. If we're not in the trade yet and we see this line, we're like, oh shit, hey, I might see some reversal here. I mean, this was a key price level in the past. Let's see. I play my odds and see if we get that bounce, right? Which we did get the bounce. Plus, we got an engulfing, right? What an engulfing is, guys, is when the candle eats up the previous candle, right? So obviously sellers were winning here, and then buyers said, nope, you know, that much continue just to buy here, and then closed at a higher price point than what the previous day's close was. So, you know, that gives you a strong reversal here. Okay. And that gives you two validation points actually, right? One, you saw this key level that you noted down on your top down analysis. Two was the bullish engulfing candlestick pattern. Okay. That appeared. So just off that bat, right? Just right off the bat, you kind of get that, you know, that understanding of how you should read it. Now, if we're looking this at today's price point, right? We see that we're actually holding up this long-term uptrend, right? You see that buyers, you know, sellers push this down here, but buyers can push this back up right away. Same with here, sellers actually push this down, but buyers push this back up right away. We over here, not as strong as these two factors, but it did also happen. So we're continuing to hold this long-term uptrend. Okay, now looking at it from here now, from a larger time frame, I can even change this to a different color so that it's maybe, you know, I can note down on my notes like green is, you know, previous resistance or something like that, and we're trailing very near it. Okay, now what I want to see here, guys, the reason why I put this on my watch list is similar to CRM. Now we're getting very close to kind of squeezing and breaking the $64 per share here. Okay, and the fact that we're getting very close puts it on my watch list. It might not happen tomorrow, it might not happen Tuesday, it might not even happen until next week or next month, but the fact that we're getting very close and we're continuing to make this higher low, right? And we're showing, right, as of now, we're showing that bulls are a little bit winning here. They're winning the tug of war here more than the sellers. Okay, now what I want to see here is I want to see this break of 64. Okay, and when it does, when we're trading on the 1 minute and the 5 minute, we want to see the 64 hold, and we want to see it break pre-market high. We want to see some actual momentum, all right, kick in. Okay, we don't want to see too much choppiness. If we see choppiness, right, and you're an options trader, you're probably going to lose a little bit of money for trading weeklies, right? So we want to make sure that we get that clear indication, that clear directional plays to the upside or to the downside. Okay, I mean, I don't really care if this breaks down and sells off here, right? As long as I know that, hey, okay, we broke this long-term uptrend. Like, Jesus Christ, sellers are looks like they're going to win for the day. You know, you can dump in your indicators and have extra, you know, conviction plays. You can go into option flow, whatever it is, right? But if we see this break on either side, that's the indication of you to say, okay, I'm going to put this on my watch list. Okay, so of course, this first part was 1, 2, 3, 4, 5. It shows bulls are still holding this to the upside. Now I want to see this continue to make higher highs. I really want to see this break. If this does break and we do hold this 64, you'll hear me alert this into the channel that I trade in. I'll probably trade this to the upside. But that was one stock that's on my watch list. Until that happens, though, you know, you can set your price alerts, right? Here, you could like create alert, you know, mark DKNG at above 63.96. Let's just put like 64.5 or something like that, right? You can just note it down, have that mark created, so you don't really have to waste too much headspace looking at the stock. But, you know, that's something you can do. The next one is, again, I noted down Apple. We did trade this for a little profit. But again, we are squeezing here, guys. We did have some news over the weekend of Tesla and Apple. I mean, you know, let's just see how the price action is for tomorrow. But a nice risk to reward trade here is I might actually trade this to the downside if we open up, you know, around 125. If we don't break that pre-market high, I think we have a sell the news event. We might actually get a lot of selling pressure. If I was looking at this just from a chart pattern perspective, I still think we have maybe a week or two until we see an actual move somewhere at the apex to the break to the downside or the upside. If you actually ask me from, you know, I don't know, from, I guess, a speculative point of view, like you can't be bearish Apple. So I probably, you know, only want to trade this to the upside. And there's many stocks out there, right? When you have your conviction levels really strong and you only want to trade this to the upside, then, you know, so be it. You only buy back on, or you only enter on pullbacks, right? But of course, let's just see how this trade plays out. I guess another one could be QS, but, you know, this kind of correlates to no real direction yet. Probably happen sometime the next couple of weeks. But just watching this, trail here on a range trade gives you some confidence that if we continue to break around or get around this level, I might trade us to the downside. Nice little risk to reward trade, or I can wait and see if it actually breaks out and again retest and it continues to the upside. These are potential plays because we have this level continue to hold up with buyers, which could be a triple bottom. So far, it looks like it's holding because we made higher lows, right? Meaning this is a potential reversal here. Maybe we get one back pullback and then we get another leg up. But this is why it's on my watch list as well. Tony, can you contextualize leading and lagging indicators more and your thought process of when to apply or omit them from trades? So with lagging indicators, everything's a lagging indicator. There is nothing that is real time, okay? Like these up and down arrows is fucking lagging indicators. This RSI is technically lagging indicators. MACD is lagging indicators. Stochastic slow, everything is a lagging indicator. When you're trading, or for me, when I'm looking at it from a top-down analysis as a larger time frame, I don't really care for how bad it lags. My take is I want to care how accurate it is, right? So here, I'm going to pull up one of my charts. It's my SMAs, my simple moving averages. They're a little bit more lagging indicator than EMAs because they get the actual, price median, right? Instead of the quick average. So something like this, when you're watching this, I'm going to just, minimize that stuff. But these are the type of moving averages that I take into consideration more than the EMAs, especially from a larger time frame. If I was day trading, that's why you saw it. I only use my EMAs because at that point, I'm getting in and out for the day. I'm day trading here. I want to make sure, rather than being more accurate, I want to make sure that, hey, these are going to set up quickly. As in, if it's holding up the 9 EMA, and it kind of shows it, hey, that's good enough for me because I want to get in and out anyways, right? Where if you're using a SMA on a smaller time frame, especially like the 1 minute, it's going to be a lot slower. It will give you more accurate data, but you're probably going to miss a couple entry points, right? Maybe a couple cents to the downside or a couple cents to the upside, where that actually, if you're a day trader, will equate to a lot of money, and that's the real reason why. But again, yeah, with lagging indicators, everything's a lagging indicator. There's nothing really well, here, I guess I can show you this example, right? Let's just say Apple, right? I think it's Apple. What was it? Facebook. I forget what ticker it was. Well, okay. Well, it was Facebook. I looked at it like 2 days ago. So this arrow up here was a TTM scalper. Again, you can use this on any time frame, but it does not appear real time. So don't, in hindsight, right? If you look like, oh shit, if I fucking sold this here, if I bought this here, like, hey, yo, I'm catching every single top and bottom. But realistically, it does not appear until maybe like the second or third candle. Okay, so meaning until this day closed, this is when it appears. Okay, and sometimes you can also take that into consideration when you're trading, because sometimes I look at this and say, okay, hey, I see an up arrow just to appear off of this close. So I'm thinking, okay, maybe we get that momentum shift now, and that I will enter on the next pullback. Remember, always enter on pullbacks. We like to buy dips, not dicks. So on that next day pullback, I'll enter the upside. And I also play my shot, because that's also giving you the best risk to reward here, right? If you enter, let's just say you don't enter at the bottom, you enter like somewhere in the middle, right? But you're also, that's a better risk to reward trade than you entering at the top here. Okay. Other things where, let's see if we can see, not sure if we can find, let's see, like AMD maybe. Yeah, not really. But yeah, to kind of talk about your lagging indicators and your leading indicators, I still think leading indicators are something that comes out into option flow, where you get the actual buy times, just because they're institutional traders. Another potential leading indicator, what I like to see it always, is just price action itself. Here's a good one. We can go over SPY, right? We all like to see the broader market. I have fucking messy ass charts, but I'm gonna remove all my moving averages. Again, I only use my moving averages and stuff as like a validation point. Other than that, I always say just trade off price, right? You can see that we actually broke out all-time highs. So this right here is more of a leading indicator to me. Okay, the fact that I don't need any indicators. I'm just looking at this from, hey, we broke out here. Tells me, bulls are 100% in strength. Okay. Now, for me as a trader, I'm not going to chase this. Although, sometimes when you chase, you might be able to capture some profit. But, for me, this shows me bulls are in control. Okay. So the next time it actually dumps and we get that retracement back to, let's just say around $398 per share, I will trade SPY to the upside from there. Okay, because it shows me bulls are in strength. And if it doesn't, it just tells me that, hey, it might just be a fake out. Well, again, you're not losing that much money. Okay, you can, get out of the trade 1% or 2% below, or you could just, have a mental stop loss that you want to place. But anything when we see price action like this I use volume. Some people, they don't use volume, but I definitely use volume, right? This breakout wasn't as strong as I'd like it to be. If this was like 2 times as much as what it was, and we had that huge breakout, that gives me a stronger indication, right? That, bulls are winning even more. But hey, man, let's see. Futures just opened up. Show this on kind of flat. But yeah, maybe we get that pullback in ES or, SPY. Yeah, we're kind of fading, but I mean, hey, futures are open. What percentage do you usually set your mental stop loss at? So I don't have a percentage, guys. When I'm day trading, again, when I'm looking at it, right, we can pull up, give me a stock like we just started, DKNG, since it's on watch, right? So for me, it's like, if you're looking at DKNG, let's just use Friday's price action, right? This is a perfect example because, a bunch of fake outs on both sides. So let's say I got into the downside, right? Off this touch, right? Off this retrace. Again, I always, pullbacks to me, if you're trading it to the downside, is when the stock goes up. Pullbacks when you're trading a stock to the upside is when the stock, goes down. Okay. So a stop loss like this for me is if I entered on this green candle. All right, let me go on the 1 minute so it's a little bit more clear. Like you'll see my trade sometimes, and I'm in maybe 5 minutes, or it could be up to 20 minutes, right? It's just very in and out, very quick. But something like this is, I see this break below, okay? So that tells me sellers are winning. I want to get in on the next pullback. Let's just say I wanted to get in very early. I wasn't thinking straight or something, and I got in on this candle. I got in the top here, though. This is the pullback that I wanted. So honestly, if I saw this next minute continue to close here, that would have been my stop loss to get out. That kind of shows me, hey, yo, look, I need to get out of this. However, again, this was a fake out, right? Because if I continue to hold, if I entered here, we get that nice dump. And this again, this is perfect. This previous day's close. So you can see the white line, which is PDC, previous day's closes, which DKNG closed on Wednesday, right? This is Thursday's action because Friday was closed. So you can see that PDC is also a good indicator for you to kind of test out your support and level resistance levels, as well as levels where you should actually, collect profits or monitor, right? Because if this, pops back up, you'll see that, hey, this is a good level that it's probably going to hold, right? And then you get that next time, right? And you say, oh shit, I learned from this. I will shoot my shot and I'll trade this to the upside. Okay. So similar to all these is just how you want to minimize, your losses. But for potential mental stop losses, most of the time, I'm a heavier risk taker than most people, guys. So I'm going to share with you my larger time frame. Where is it? Let me give you a better example though. Let's see, Apple. Apple's good actually. So here you can see it's tightening, right? And let's just say we wanted to trade this 124.16 on this break, okay? And let's say Apple does give me that break, then I would use this exact same level of when I entered as a mental stop loss first, okay? Because I need to see that this continues to hold, right? That's gonna be my first mental stop loss, mental again, okay? If it doesn't hold and we see, let's just say on the minute, a bearish engulfing or something where it shows that selling pressure is very strong, I'll get out of the trade immediately. Okay. Same again when you're following SPY, QQQ, DJI, WM, whatever it is. You know, just monitoring what the broader market is doing with what you're actually trading is a good place to set your mental stop loss. If this went up, retraced, continued to go up, and it went back down, right? Let's just say this is the this is bad drawing, but let's just say it went up. I'm in huge profits, but I did not sell. It went down, and it went back up again, right? And I'm still in it, right? I mean, I didn't close out my trade, so I didn't lock in any profits yet. But we're making lower lows, and we're seeing this touch again. That is a good indication for me to get the hell out. You know, again, I could also get faked out. You know, I could continue to do this, squeeze out, and then pop up, right? But you know, stuff like indications like this, where it just gives you the higher probability that it's not going to work in your favor, will immediately tell me to get out of the trade. There's no magic ball here. There's no right or, you know, you can't always play it right every single time. You just got to play with what your odds are. But that's going to be, you know, what I look for. So there's no real percentage. I trade based off this price here. Price. All right, guys. Yeah, that was a good webinar. I think I will end it here. If you guys have any questions again to how to find the scripts to get on your TOS or use the option flow, you know, equity blocks channel or the unusual options activity, go ahead and, you know, shoot me a DM. I'll try and get back to you as soon as possible. But yeah, I think we might get a good Easter run starting Monday. So let's make some money. All right, guys. I will see you guys tomorrow.